interesting. Still setting up in the AM. I think I need more coffee. Let's see. I will do this here. Just setting up a couple of things. We'll start keeping track of the market. In fact, let's see what's happening. Inflation day. Interesting YouTube titles. US inflation cools more than forecast. Yeah, some are saying we're going back up, but that's some. There was a bell curve with a 25 to 50 basis point hike, higher probability. So it looks like we're probably going to continue. But there was a small, like 2.5% chance that we're going to have negative CPI. So let's pray for that 2.5%. It's not very strong. What else? Nothing crazy is happening today other than inflation becoming huge, like as far as the keyword, which doesn't mean it's bad. One of the things you have to realize is the fear and greed index. This tells you basically what the market sentiment is, and you always go backwards of it. So if we're extremely greedy, you want to sell. If there's a lot of fear, you want to buy. That's because this arrow, by the time it reaches the dedicated location, it has time to pass through fear, and then the beginning of extreme fear, and then extreme fear continuously, but then eventually, like, it's done. So as soon as it reaches this section of extreme fear, you should probably be buying, and then as soon as it gets to extreme greed, you should probably be selling. So that's one of the case scenarios. One thing I keep track of is Google Trends. So what I'll do is put in some key terms. Let's do our meme stock comparison first. Blackberry? BB? Blackberry? BB? Was that BB? I haven't heard about Blackberry in forever. How's that doing? Buzz sentiment. Let me change time. Why is it so weird? Why are you in after hours? This is not the time. What time are you on? 09:05? What? This one's updating correctly. That's a weird update. So 010 is not. Oh, here it is. Okay, this is better. Yeah, I'm gonna look at the sentiment at the daily. Fuck the hours, fuck the 30s, doesn't make any sense. So the sentiment's pretty low from its peaks. It's a new index, so you're not gonna have a lot of history, but it's a good kind of comparison. 2022, 2021, 2020 sucked, so this is still suck. So if you want to see positive sentiment, we're probably looking above that 25. But right now we're at 15. So it is reversing. You see this, too far. You see this kind of not very clear. A couple of things happening down here. Let me break this down to the single focus. Buzz. Daily. Alright, so you see a couple of things happening here. So 16th June last month, we reached the bottom, a particular bottom. It's not the bottom, we don't know for sure. It could go back down and continuously go down. But because of the huge movements we've had since June, since like the last few months, let's not talk about 2022 in general. There is a chance that it could cool off at this location and sentiment could go back up. Now again, sentiment means market sentiment, and specifically, it actually does have something to do with meme stocks. So you're thinking the AMC GME thing, what we were looking at earlier. So this sentiment is retail investors, not institutions, not corporations. They probably play in it to make money, but the idea behind the sentiment is how the retail market is looking at the health of the market. So right now we seem to be picking back up. Down here we had a few technical indications. First we had a bottom, what we would imagine to be a bottom. Again, it could not, or it could basically break that later. What I do is I always align with the full body candle, not the tail. The tail is good for certain situations, but the body is more important. So we have kind of a bottom. We have some hidden pieces to drawing. We have kind of a, can I draw? Can I draw? Can you draw? Oh yeah, I have to go. What? Okay. Okay. Oh, huh? Can I not write? Alright, well I guess I can't actually draw lines. I'm not a fan of Weevil. I can't do. Okay, I'll just do this then. Okay, so we kind of have like a shoulder here, right? So we have a shoulder, what we would consider a shoulder. We have we have the head. So this would essentially be the head. It's not perfect, so it's not going to be essentially the correct way to look at it. But because we do kind of see this consistency, now the shoulders, this is kind of where it's really close. The body of this candle nearly touches the tail of this. It would have been stronger if the body of this candle touched the tail and not mid-air. So because the body of the bottom of this candle here is kind of floating in mid-air, that itself breaks the head and shoulder comparison. But if the body was a little bit up or the tail was a little bit further down, touching that, now I'm gonna make red line. So this touches this, then it would have been a lot stronger. But now we can't really compare the head and shoulders. Other things we can do, kinda, actually. That's better. But that's one thing to look for. You're looking for, okay, so why am I looking for it? If we had a nice, strong head and shoulder pattern at the bottom here, I would have been convinced that that would have been the bottom. That would have been done, that we saw demand pick up, that we tested a very low value of sentiment and then it went back up. So that's why I'm kind of looking to see. It's still partially a head and shoulder pattern, but it's like 20% of the strength that a perfect head and shoulder would be. Right, so it's not going to be as strong. So that's kind of why it's going up, but I don't like that comparison, so I'm going to remove the head and shoulder. What I do see otherwise though is a break out of this. Come on, dude. Out of this. Oh, I hate you, Weebo. I fucking hate you. Draw fucking line. Oh my god. Oh, this is a horizontal. I'm a fucking idiot. I'm a fucking idiot. It's not Weebo, guys. It's me. I'm an idiot. Keep that in mind. Okay, that's the one. So back to what we're doing. This is a trend line we broke out of. This downward form. So we had a downward movement. This part, it's not. Okay, good. Now I can actually move it. Sometimes it moves the whole line. Sometimes it just moves the angle. So this was a downtrend we had, but the interesting thing is when we look at AMC, because AMC is going to be a little bit more giving, right? So we had a very strong bounce at a bottom value here. We have this breakout of a trend line, so we've changed direction. We're not going down anymore. And one thing I like to compare is the strength of each downward turn, right? So this was a slightly, this is definitely a steeper angle, is my point. This one's less steep, so it's basically not a movement down complete. When I see this, I normally expect, especially in a weak market, in a bear market, I expect another big one, right? So at least 2 to 3. This is kind of a warning shot, and then this is the final when we have a really steep line. Sometimes it can go on further, and again, we might as well consider that from here we might as well do something much bigger, right? The sentiment could go very, not negative, that's actually not going to ever happen. It could probably go down fast, right? So like the dollar value. So sentiment looks strong, people are coming back in the market. Now that doesn't mean there can't be a rug pull by big corporations. So what do we test next? Well, we play around with some considerations. First, we know AMC is going crazy. Now, if you know enough about the insides of AMC, not just that it's a theater, I'm talking about the market concepts. AMC is over leveraged. There are billions of dollars, if not trillions, of basically held up cash in AMC. There are companies that owe money within the AMC stock itself that they have to return that money. And the problem is, the higher the price goes on AMC, we've gone to $27.50 from a low of $9.70. The higher the price, the more expensive it is for them to return that money, right? Because they're not returning money, actually, they're returning shares, right? So they have money to give back and buy those shares, but technically, the higher the price, the more expensive they're going to buy it back. So that circular feedback loop, just like if you put a microphone next to a speaker and you let them go, right? You put a little sound in there, it's gonna feed back that magnitude over and over. This is what's happening with the market. These corporations, they're not going to overspend to buy this shit. It's dumb. They're smart, quote unquote, right? If they were smart enough, they wouldn't be in this position in the first place, but they're smart money, as they call themselves, and we the retailers are what they say, dumb money. So we'll see after this recession who survives. Now, they consider that AMC should not be this price, and they're continuously shorting it, which is that case scenario where you're starting to owe money to borrow shares, right? You're borrowing shares and you have to return it, so eventually you have to pay money to return it. So even though it's going up, they're constantly trying to push it down. Not to push it down on purpose, because that's illegal, but by their explanation, their analysis, these corporate institutions, hedge funds, brokers, whatever, their analysis is that AMC is not a fundamental valued stock. So they consider that it's going to go down, so they continuously short it. So let's back up, right? A lot of info, a very quick amount of time. Imagine I'm borrowing something from you. You're not going to give it to me for free, right? So imagine borrowing a car. I want to borrow your Mustang for a weekend to impress some chick, right? You'll probably be like, alright, cool. If you're like a best friend, you're like, sweet. But if you're just some business dude, you're going to be like, alright, I'll let you borrow my car, but give me like, I don't know, $100 a week. You can borrow for 2, 3, however long. Just give me like $100 to $300 a week, whatever the price target is. That's not important. The important part is that you're paying to borrow the car a week, not just once. You're subscribed, just like these corporations are subscribed to their shorts, and the higher the price, the more their subscription costs. So that's the concept here. Millions of over leveraged corporation dollars in AMC, and as soon as this fucker pops, that over leveraged money has to be returned in some way or another. Corporations, institutions, banks, they're going to have to be selling buildings, selling equities. They're going to sell whatever they can to cover the money that they owe. That situation is called the margin call. We haven't reached that yet. We almost got to it back in 2021 at $72. It should have been much higher, but it was stopped at that value. So now we're seeing some spikes again. And honestly, the biggest trend setter here, they can push it down for some time, but they can't push it down forever. Look how long they've pushed it down for, and look at us breaking out of that trend line. So right now, we've had this downward movement. Well, this is kind of also what I predicted some time ago, where it would flip direction. and this value here, technically they're over here, so I'm a little bit off, but whatever. But once we broke out, now we're in a totally new territory. There's no more downward motion. We're either going to start testing this section, like this section here, from this place to this place. We're going to test this a lot, so we'll be between 13 and 22 for a while if we stay in this section. But we're not going to go below it because there's a lot of volume waiting to buy at the lower prices. I bet you if we even do go down, we might hit $10 and go back up quick. We're not even going to go down to 9. Not even 9.73, right? Just 10 straight back up. But right now it looks like we're kind of stuck in this box. We have to play with the volume. We got to travel in here a little bit. People are going to be buying, selling, buying, selling. We're going to average down the average cost that each individual has. Now you can see this with the VWAP. I believe it was the VWAP. What's the VWAP? VWAP. VWAP? Got so many indicators on here. Hold on. No. Stay in drawing mode. VWAP. Why isn't it here? VWAP. Hey. You can't take away my VWAP. The fuck? For real though? What? What? All the other ones work. Why the hell doesn't VWAP? Hold on a second. What? 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 You better. What? That's bull. Okay, so I think I can find it with another one. Oh, bands. Okay. Oh, come on. Is VWAP broken? Yo. Yeah, Weeble sucks. I normally use. Fuck it. I normally use TradingView. I used to pay for the ability to have like 6 charts up. Now I can only do 1, but that's fine. I don't need that. I can use 6 charts in Weeble. Alright, so AMC. Wait a second. That's not the thing I want. No. This is, nope. Nope. Not the one I want. This is unpin. I want the other one. TradingView, the one I installed. With the tabs. This is the browser plugin. Remove this. Uninstall. There. Alright. The other one. Come on, don't be like that. I literally installed it and I used it on this. Oh, what? Okay, whatever. Into task, I guess I found it. Alright, okay, we're here. Alright. So here's what I'm looking at. Remove those. First and foremost, the highest volume on AMC right now, the biggest support we have is at 1250 overall. Now, this is volume profile. This thing on the right side, right? This thing. And this basically shows how many transactions were made in that particular price point. Right down here, we have a lot of transactions. Like, this is the peak of transactions, and that's why it's highlighted in yellow, right? So this location will be very, very, very difficult to break. So we can be and here's how you look at it. It's all probability. It's not, you know, for sure, the probability of us dropping below this line is low. And I'm talking 5-10%, right? Optimistically or pessimistically, 5-10%, maybe even 20. But to stay above it is 80%, right? So we have a high chance to stay above this for a while. Further, we can see some developing points. There's a lot of volume here, so I can easily create another horizontal support here. Oh my god, considering that it's already flooded with shit, I'm probably not gonna do that. Oh yeah, ascending triangle. We had a pendant. Yeah, a rising pendant. Broke up. Yeah, those are done. I don't need that. I don't need this. I see this. I saw that already. I saw that. And there's that big piece. This red line that I drew for the longest time. I've been waiting for us to break down or break up above this since we've been hovering on it, right? So this is the biggest part that we broke out recently. right? And not only that, we broke out. Look at this. You have to really appreciate the beauty of this. We broke out flying colors, came back down, tested it just to see what's gonna happen. Are we strong here? Are we weak? And then was like, fuck that shit. So we good. We good in this section here. So we do have a very safe buffer in this space. We're probably gonna play around this area. Actually, this is a much more dependable square than the other one. So we're probably gonna hover around this space for a while until we gain enough volume. Which is why we came here, which is why I'm gonna get VWAP. Where's my VWAP? Unbalanced volume, no. Exponential, no. Okay, VWAP. Volume weighted average price. Basically, what I mentioned earlier. This shows you the average price based on the volume and transactions of any particular time period. So, what you use this for is say, hey, there's a 13-day, no, that's the EMA VWAP, okay. Yeah, there's one, let me see what these values represent. Lower band, upper band, great. HLC band multiplier. Oh, multipliers. Why, that's it? Okay, whatever. No, there's no multiplier. That's off. High VWAP on 1 day or above. Oh, HLC. Let's do close. Okay, based on the closing price. Alright, so VWAP here. I'm gonna remove these, and these. And keep VWAP. Okay, where's my V? VWAP. I'm not liking this. Hold on. Maybe close sucks. Not close. HL3, I guess. It's this line here, but it's not prominent. Maybe I can. Oh, maybe it's. Oh, yeah. It sucks on the higher values. Okay, there we go. So you can't really see it very well in the higher daily values. It's very. Because it resets every day. The VWAP resets based on daily volume. So that's why when you go on a daily chart, you're going to see basically following the exact same. But what you're looking at here is this. These lines here, the blue line is the average that basically people have bought. So if the price currently is 22, the majority or the average of people buying was 22.80, right? So that means most people bought it at around the 22.80 average. So if we were to isolate everything else, nope, no, I don't like that. This square is customized. So if we were to kind of isolate everything else and just look in this square and really isolate the time periods to just this square, we're going to forget about the outside, right? So if we focus in here and say, alright, VWAP's up here, this is the highest probable average, and this is the lowest, right? We're not really looking so much at the particular values of the average, but how far we are away from the average, because fear happens to be that if I'm holding it for 22.80 and currently the price is 21.74, if I'm a decent trader and I'm emotionally stable, I will hold. 21.74 is nothing in comparison to other drops I've had personally. So I will hold, so it's strong. But some people, new people, will buy 1,000 of them at 22.80. They'll lose $1,000 because it went down $1, and then they'll sell out, and then it's gonna go back up, right? So the fear between the current price of that particular time period and the distance towards the average cost per purchase basically gives you an idea of, okay, are we far enough that people are going to get scared? If we're underneath, of course, if we're above, then basically we're freaking happy, right? If you're up here and the price of, oh wait, hold on, if you are, it hasn't happened recently, okay, there you go. If the price is up here, right, 22, and you're averaged at 19, you're making basically $3, you know, per share. So the confidence is super high here. But again, remember, it refreshes every day. So here's the after hours, here's the end of the day, right here the color change, and then here's a reset, right? And then it readjusts with the new values and then creates a new VWAP. So that's the VWAP. I really like VWAP to consider during rallies. It shows you how strong the rallies are and where the average person is positioned. Here, we're super strong. Here, we're basically on average. Nothing, no fear, no greed. We're waiting for something to happen. Here, we're below, but still not far. So basically, people are still cool with it. And to consider the next thing is the social sentiment overall. If you've been keeping up with the market, there's a new group of individuals entering the market, the retail investors, and they're learning. They're learning in masses. They're using YouTube, they're using whatever concepts that they can find online and learning how to use this market. With that becomes a huge competitor to original inhabitants of this market, the hedge funds, the banks, the institutions, the ETF fundraising, blah 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 blah. They were normally the ones playing with this. We would buy ourselves a 401k and then they'd play with our money to make more money for us for our retirement. But people have taken it in their own hands now. So the market is actively changing. It's actually much different from what it was a year or two ago. And I've noticed the changes as it happens, right? So you have a lot more people holding. Even the mainstream media, I laugh at this. The mainstream media stated that we haven't witnessed a recession and we haven't witnessed the reset of our economy because the retail investor hasn't sold yet. I think this was like a week ago when I heard this kind of bullshit. And I'm like, yeah, because we're fucking holders, man. What are you expecting? Us to sell and then you guys to buy in at a low price and then fuck us over again? Fuck off. So we'll go through a lot of media analysis also. It's a psychological effect. There are certain things that I want to go over in the courses I'm making. I'm going to have kind of a blueprint video set that gives you the terms and ideas that you can go and hunt out. And once I set it up, it's going to be a series part for technical analysis, a series part for the psychology of trading, and then a series for the fundamentals. The fundamentals is going to be last because those are for investing and it requires a lot of mathematics, so I'm probably going to also incorporate a basic statistics course to go into the fundamentals. Now, the fundamentals, they're not crazy. You don't need to be like a theoretical statistician to go about using fundamentals and statistics, but you should be generally comfortable enough that you're thinking kind of in probabilities. Kind of like the examples I've been giving you, right? 50% this, 50% this, 5% chance to do this, 2.5%. As long as you understand kind of the impact of those statistical points, then you will be able to understand risk versus reward, and your instinct for trading increases based on that risk and reward. Because in case scenario, the end result between an investor and a trader and anyone moving their money anywhere, whether we think about it or not, is the risk that we take doing that thing versus the reward that we get after that thing is finished, if there is any reward anyway, right? So not a lot of people consider the risk reward factors, but I will tell you, in order to control yourself as a trader, if you're looking at doing this professionally, you're gonna have to go inside of your own head and start playing around with what you have been accustomed to as far as emotional fear, anxieties, and things like that. I would not 100%, if you have a gambling problem, if you have anxiety problems and you can't control them, if you can control them, cool. If you can't control them, no, don't do trading. This is just another heavy lifting on your shoulders that if you haven't had any control, if you need support in some format, your emotional aspects of your life aren't stable, I do not recommend trading. Because not only are you going to emotionally fuck up your trades, you're only going to cause a more emotional pain in your life now that you're losing money. It's a full circle. It's a feedback loop. So I would not recommend it. There is a high chance of mental gambling habits available in the market, because in the end you're making a decision and making money on it and losing money on it. So yeah, it is gambling. It really is. So is crypto. So is going to the casino. The stock market technically has nothing to do with the economy. So that's gambling 100%. I don't believe that the stock market itself has any particular use other than the fact that companies can save themselves if they need the money, I guess. But in the end, the stock market's just basically gambling. You know, you're making bets based on the things you think are gonna happen. That's gambling. Even if you have data, still gambling. You know, there's some people that can play blackjack and poker and they can analyze the probabilities and fuck you over. They're using data in their head. But doesn't mean they're not gambling. Still, by playing those games with you and getting the money from you, that's gambling. So regardless, someone's losing on the market. That's the point. If you're winning and making money, someone is losing and money is going bye-bye. The goal, the absolute goal, is to minimize any risk in your trading, your mentality, and optimize the rewards from your actions. You're going to find a lot of complications in all of that, because first, you have to learn how to trade. Second, you have to learn about yourself. And believe me, a lot of people don't do that. Anyone that's been in a relationship since high school and never been alone, they've never had a time to learn about themselves. Anyone that has never spent time or has always been around people and goes out and parties and whatever and spends time with people and never has a time alone to read a book or just spend a couple of months in isolation, you've never had a moment with yourself ever. So be ready to spend time with yourself, your mind, and in the process learn how to trade, learn what to watch out for. But yeah, in the end, like, these videos are not to learn, not to teach everything about trading, because there's so much. Every individual is different in trading because there's just different things, and you will understand that once your awareness increases about what trading is, how it works, how we use it, what kind of trading there is. It's really more to increase your awareness of trading and then let you expand as you see fit. It's not a class to be like, hey, buy my class, whatever. I'm not even going to sell this one. I'm not going to sell. I'm probably going to teach it, you know, if anyone needs to hire a tutor sort of thing. In fact, that's probably going to be my main direction, is going to be tutoring on the side. But primarily, I want to essentially create this resource to be more aware of the market. It's more of a instinctive adjustment, optimization. It's hard to explain, but when you do something for so long, you have an instinct to it. You can look at the chart and be like, all right, it's strong, it's weak, you know. I can make a decision here for 5-10% this way, this up or down direction, especially for the fact, and minimally for any individual on this planet that is in a capitalistic system, if you don't understand that you can make money when the market goes up and when the market goes down, you can make money both directions. That's at least the minimum everyone should know. How to make money when the market goes down and how to make money when the market goes up. Because honestly, having that ability, even if you're not keeping track of shit, you can be seeing the news in the world around you going to shit, and then you hedge yourself on the way down, and yeah, maybe inflation happens and we're fucked, but at least you made a choice to hedge yourself and protect yourself for the future. At least minimally that. You don't have to know how ETFs work. You don't have to know what a stock even is. Just the basic detail that you can make money on the way up with inverse funds and down with regular, up with regular firms, ETFs, and then down with inverse ETFs like the VIX or UVXY or SQQQ. There's a lot of ways to make money in both directions. Most people think, oh, market's going down, shit's gonna happen, I'm gonna lose money. Yeah, if you're doing nothing and standing exactly the way you are, yeah, you're gonna lose money. But That's the problem. Most people don't know that you can move your money from one place to another. You can go from going long to going short. You can say, hey, I know market's going to go down. I feel it in my bones. I'm just going to put 10%, 20% in the appropriate places that will grow if the market goes down. Yeah, you can do gold, but you're saving money. You're gaining a percent or two. Gold is a safe haven for wealth that exists. If you don't have wealth, this is the time to start building that wealth. Investing, saving. Okay, first and foremost, I can't help you with saving. I can't help anyone with saving. Our own personal bill is our own personal bill. Our own way of life and the quality and the cost that it takes to sustain our way of life is our own fucking business. But I will tell you, every person that lives in debt can live without debt if they adjust their way of life. The problem is most people keep going up. They get a better job, they get a bigger house, they get more cars, they get a better job, they get a bigger house, 2 houses, a vacation home, whatever, condo, woods, whatever. They keep going up, and not only are they increasing the amount of stress in their life to try to keep up with all this shit, they're basically wasting their paycheck that they just made. Now you're living paycheck to paycheck, buying or paying a mortgage on a cabin, vacation. The point is, no matter how much money you make, even the most rich people live paycheck to paycheck because their life is expensive. Whether it's necessarily expensive or unnecessarily expensive, it's up to the person to decide. My personal perspectives don't matter in the case, but regardless of who and what kind of money you come from, if you adjust your way of life, you can start saving and investing. That's it. And most people have actually started. I think there was some data that showed a lot of people are reducing the amount they spend on as far as luxuries go. But the rich people are also spending plenty of money because the high quality goods are still going off the shelves. Like the high quality. You want to call them high quality? I want to call them high quality. All they are is just over expensive. So the expensive brand bullshit is still popping off shelves, but this is probably because of class separation. The middle class is gone. It's kind of like middle upper class now versus the lower middle class. That gap in the middle is widening so far that give it a couple of years in the same direction and maybe a huge crash and we could end up like Brazil. But optimism aside, I think it's fine. The market runs in patterns. There's a lot of safety nets. And honestly, do we need a market? Big question mark. Right? If it collapses and everything goes to shit, are we dead? No, we got fucking nature. Fuck it. So whatever. So I'm gonna be farming a lot more if that's the case. So AMC, look at that trend. It's going up. It's beautiful. Again, we're popping out very, very nicely. Very, 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 very. Oh, just so fucking beautiful. I swear to God. It's so beautiful, that pop. So that pop, that big candle, that was 300 million shares. Damn. That's the highest value. That's the, yep. Today there's 210 million. Some of the volume coming back. Indicators. Let's do some of these. EMA. I like that. RSI. I tested a lot of indicators, and honestly, it's a hit or miss. There's some basic ones. They're not basic ones. There's some standard ones that everyone uses. And the thing about indicators is kind of also psychology. Because if you're using a tool, learning from somewhere, right? You learned it from YouTube, you learned it from school, whatever. Well, so do other 100,000, 200,000, couple of million people use the same tools. So if you see one pattern and you act on that pattern specifically, then other people are probably acting on it also. For instance, if I write this yellow line and I didn't see what was happening here, in fact, I think I can replay. Right? Yeah, here. Perfect. So if I don't know what's happening here, right, and I say, hey, I have this line, I see a support here, kind of bear, but I definitely see it here when it flattened out right here in this spot, right? So you can see definitely something happened here. This was a support, and you'll be like, all right, well, not only that, I have this downward trend here. There's got to be a point where it bounces here, right? So you're looking. Your pattern is this. You're down low. Where's my RSI? I don't need this one. RSI. I like the stochastic, but I'll just what? That's symbols, dude. Indicators. Where you at? There we go. And looking at this, here's another simple or another indication. So again, psychology plays a big part in these technical signals, because once you know what is to be expected is what's going to happen, because others are in the same mindset. When the RSI is down below 50, there's a higher chance for it to go up, because it's basically the strength index. How strong is it? It's super strong up here, but eventually it's going to get exhausted and it needs to breathe and kind of rest. So it's resting now, but eventually it's going to pump itself up back and have that strength again. But normally it's going to be underneath the 50 mark, right? So that's how the waves of growth and decline work, right? In these sort of RSI strength waves. So now we're here. Not only that, everyone's looking at this line because they all see kind of a little correlation. 100,000 million people, something, right? If I go into the 1 hour mark, I'll probably find something better. Can I do this? Can I do this and then this? Nope, that fucks it up. Where am I? Oh yeah, no, I did it. Okay, cool. So here, if I go into smaller timelines, I can align it a bit better, right? Flat here, actually here, bottom of the candle, here a little bit towards that body, somewhere in the middle, good average. Here matches that body, good. If it sits on the candle wick, it's fine. But if normally you want the body to be the focus, so like the end of the body, the upper, the bottom, never in the middle or the edges. But if it was me trying to make some support here, like, oh look, this body here, right? Well, it's touching nothing else. That's not a real support. Like maybe it's touching this candle, that's pretty decent. But then I would argue it's actually down here that you're looking at, right? Because this aligns a lot better with these two body candles, this body candle. And in fact, given time, I'm sure that would be the actual resistance. So if we go back to weeks, there's that line that we have determined with technical analysis that not only we know, but millions of people that participate in the market, and they have the same line. So what are they going to do? They're like, this could be a really strong resistance. Let me watch what it does. So you're watching, and you're watching. What is it? Update every second. And you're watching, and you're watching, and you're watching. And you're like, oh, there it is, and you're like, okay, cool, it's going up. But I know there's resistance here. All right, it passed my line. Sell. Everyone's selling. And then people are like, fuck, I missed it. I'm going to sell again. This is what's happening. This is the psychological effect of the market. These technical lines, because we use them, there's no magic in this. There's no, wow, this really does work. Yeah, because everyone does the same thing. It's a psychological herd mentality. Technical analysis is herd mentality. That's number one, right? So we're going to learn all the symbols, all the lines, all the ways we place things, all the indications and pieces that we can use to kind of find the most strong herd mentality thoughts, right? So this was a very strong thought. One, we've never been here. I mean, we have been before, but that was during the specific, like way back. In fact, this was a really strong trend line that I put in a long time ago. So I'm kind of sad. That 24, did we get rejected there? Yeah, that's where we are now, actually. Let me just reset this. Exit chart, replay mode. Yes. Do you want to exit? Yes. Okay, good. All right, perfect. Yeah, no, that's a really strong line, so no wonder we denied there. See, that same line that we did before, the one that I just explained, is now working itself again. This is a very strong resistance because it used to be one of the components to AMC. This was when AMC was stable. This was AMC, theaters, yeah, everyone's going, movies, yada yada. Streaming still involved, so that happened. But 17, 18, 2019, 2020, right? And then it blew the fuck up because all of this downward was shorts. It wasn't people selling their positions. If it was people selling their positions, overselling their positions, it would have made a lot more sense and there would not have been this big move. But what happened is people borrowed shares to short constantly down and down to a point where they're literally shorting in GME's perspective. I don't know if it happened with AMC, but GME, same exact thing. But they shorted so much that they borrowed more than the amount of shares that exist in the market. How much? 120%. 20% more? I think it was up to 150% at one point. But how do you borrow something that doesn't exist, let alone was never created? This is the fundamental flaw in the market. And this is the fundamental reason why these fucking crazy price actions are working, right? Over leveraged, owing money, in depth, margin calls. Those are the last pieces to the market that we have not seen yet. The SPY has seen the inflation fall. This white line trend, that was the inflation fear, the CPI data, the rates going up, right? This is a brief moment of happiness. Some people are considering that maybe that's it, we're done. We don't have to raise much more. You know, we might get a negative. There's a chance things are going to turn around. But notice how it's aligning with what I'm predicting, because they haven't included the other parts to the economy. Sure, they have considered here this downward trend. SPY has priced in the inflation for maybe a 10% rate hike, right? So a total of 10, we need to be about 8. We have to actually stabilize at 2 in the end, but I think we're going to 10, right? So this has basically incorporated 5 to 10% interest increases, but they haven't thought about the margin that they owe. If the shit goes and hits the fan, if this and I fear that all this over marginalizing and shit happened around here, wait, hold on, right here, 2016, right? Now I've shown this a couple of times. This is my general sentiment on the market. It travels in a sine wave. It's stable. It has certain bursts of growth when the economy is doing great, and then it should have breaths of relief and continuation. But the problem with our market is something happened around here, where just shit kept going, which is okay. But 2015, it was an okay time, you know, it was good. 2018 was not good. 2018 we had some, I think, currency issues. We had a hiccup. 2020 came along. But just notice how long it took for us to move up, right? And then how quickly the, not only movement up, but the like fucking slope of that. That's ridiculous. It's almost a line straight up, right? When you're looking at it in the long term. It's a very steep line. So what's happening over this period of time where things are changing? Well, we kind of stopped gold standard way before this chart even started, so we can't even say anything about that. But we have to consider that money in general is easier to reproduce. We've been printing since 2008 here. We've been printing since the financial collapse. In fact, since then, I think we've probably printed 95% of the money that exists now. Maybe 90, 85, 80, maybe I'm overestimating, but it was a big fucking number. Like, we've printed the majority of the money that exists as far as US dollars in the last 12 years, 14 years, right? So that gives us a problem. Where's that money going, man? Is it floating around? No, we haven't had crazy inflation, right? Now it's kind of picking up, but where has it been? Well, it's been pumped into the market, my dude. All of that money that's been printed, all of that money that's going through treasuries, yields, banks, financial institutions, brokers for this or that or this or that, all that money that was given to them to fix the issues that they had with the housing market, where do you think it fucking went? There it is. So this shit needs to pop. This is like a giant pimple that just needs to pop. And this overinflation is fucked. It could get worse. Wages are rising pretty steadily, but honestly, when people tell me that wages are like more comfortable now, like, oh yeah, I work at Starbucks and I can actually live off of Starbucks, now I'm thinking in my head like, oh shit, that means everything's gonna get more expensive now. You know, it's still like what, an hour for a cup of coffee if you want to drink at Starbucks, you want to work there? I don't know. So don't quote me on it, but I'm seeing 220 as I mean, right now, small chance, 5-10%. But if we drop below this growth trend here, because now we're testing that, we're gonna see if we're actually growing again. The growth trend from here, even further, right? This thing has been, I can probably extend it even down to there. Yep, there, that's the change there. Yep. So that's the average growth. So if we can bounce off of that red line, we are safe, and we might have a chance for more ups and probably a better stock market, but we'll see about how the economy works with inflation overall. Yeah, it's a long way down, I think. Like, that would stabilize it. I think the value was, what did I, here? What was here? No, honestly, in a way, I'm kind of looking at this yellow line. This yellow line was never tested. I mean, it did kind of test here, but that's, I wouldn't even, I guess that's kind of like a double bottom, triple bottom. But even after all this growth, it never came back to test it. Nope, it didn't come back. This was just a guide that I had that's getting in the way. It got close to testing it. I mean, it was not really, $40 away to testing it, right? But it didn't necessarily test it. And every time we have some sort of crash, here's the interesting part. Every time we have some sort of crash, we have this issue. The fuck? Who is trying to get on my thing that I'm already on? Me. That's who, I think. Okay. So every time we drop, we create this touch point. It's not perfect right now, right there. This sort of touch point, right? And it creates this slow point. So here's where I can actually play with the rules a little bit. Numbers aren't perfect, and you know, people aren't perfect. So when they buy around the area. So as long as I'm kind of touching the bottom of this, I'd probably like to touch two things, the body and the bottom. For this one, I'm touching this and this. For this one here, right? So my consideration then is that we're going to fall somewhere around where this trendy line is. This is, I guess they call it a megaphone pattern. There's no real particular meaning to the megaphone pattern, right? I kind of did, yeah, actually I did it twice. I did it with the red line here, kind of. Make it yellow so it matches. Yeah, there we go. And with this line. Okay. So this megaphone pattern in between, where are all my tools? I'm losing all my tools. Between these two programs, I'm forgetting where shit is. Where's my freaking, there it is. Alright, so the megaphone pattern is something of this form. So you're expected to kind of follow the upper and the lower bounds. Now, it's not always going to be the case, and it's not a very strong pattern, so it doesn't really pay much to look at it. But under the circumstances of the abnormality of the market that's basically have been happening since 2008. How the pattern of the market has changed from a growth to breadth to growth to breadth to growth to breadth. We should be, if anywhere, we should be somewhere around here if we were balanced. Believe me or no? Do you believe me? Let's ask Warren Buffett. So if the price right now is 417, right? Let's ask Warren Buffett. Not actually ask him, but let's use the Warren Buffett GDP indicator. Right now, when we're looking at the GDP, the actual feasible, countable, financially sortable documents of the GDP, and you compare it to the growth of the market, we want to kind of compare what's the difference, right? Like, what is the comparison? Are we overvalued, like, for the amount that we can write on paper? Is our market reflecting our country's GDP? That's kind of the question that we want to ask. Oh. Why am I in DuckDuckGo? There we go. Where is that chart? There it is. That's the one. Perfect, perfect, perfect. Warren Buffett indicator, S&P. Alright, so let's take a look at this. So, market value is blue. Oh, we're in 12 too, and that's horrible. This is an old one. Look at 12. Let's look at 2012. The market value, the GDP, is the actual value of the market. And the actual price of the overall 500 S&P was higher. About twice, 3 times higher. So we're in 2012, we can say we were about 200% overinflated. But freaking DuckDuckGo is not the best choice for this, so Warren Buffett indicator. Okay, fine, here it is. So the current indicator states that we are 179% overinflated, meaning the market itself is more expensive than the country that is producing the stuff that it says it's producing. So basically, this is another way that the actual stock market does not represent the economy. The GDP is the economy. The stock market is a reflection of like a sentiment to the economy, but in reality, it's a tool. It's a tool for companies to take money out, and it's a tool for regular people to gamble. I'm just going to say that. People gamble here because they do it blindly. They buy shit that they think is going to go up. They lose money. That's called gambling, right? So doing things without looking at the numbers is called gambling. Even going to like blackjack and counting cards, at least you have a mathematical kind of benefit, right? You have a mathematical advantage over others, right? Gambling in general, no one has the advantage other than the house. I want to repeat that. No one has the advantage other than the house. People that run the game are the house. Ladies and gentlemen, who runs the market? Corporations, hedge funds, brokers, whatever. They run the market. They even have their little what the fuck, SEC, no, DTS, DSTT, some crap, some abbreviation, and some, I don't know, community of old people that decided that they're going to regulate things. And they're doing shit because all of them are basically CEOs of banks, and they run that governmental branch. And they get to call the shots on how much the fines are. That's why when someone inside trades, their fine is like, or someone breaks the rules that's rich, they break the big rules. This is the problem also. The big rules, when they get broken, and the only people that can really break them is the people with big money, they get fined like $500. Let's say you trade on insider information, you made $5 billion, or $5 million, right? Did some calls, did some options, did some stocks, you have some info, it went up, you made money. Now, that in itself your fine is probably like $500 for not reporting what you did, right? So if you don't report what you just did, like in a 30-day period, you're gonna pay $500 fine, right? But if they catch you with that shit, if they catch you using that information, they're probably gonna fine you 1 million, 2 million. But you still made five, so you still profit. That's the bullshit. To a rich person, this economic system is simply another bottom line. What's the cost of making this 5 million? $2 million in fines for not doing the things the way I should have done them. Oh, still made $3 million. I guess I'll do it again. Tell me what kind of fucking lessons rich people learn from that, right? But the problem then is, what's alright? What's the rest of us do? What do we have? Well, we kind of have a uneven playing field. We don't have the information that the big guys have, right? We have to scour for information as much as we can. We're more at risk at gambling because we're introduced into the market with these fucking apps that look like games. We're not introduced with what I've been looking at, data and information. You have like this little app for Robinhood. You press a button, you buy something, confetti comes out, and a little trumpet, whatever, makes it all fun and shit, but it doesn't teach you how to fucking trade. So we have that. We have a distraction. We have a higher chance of being gamblers than the big boys, because in the end, they're not gambling. They're counting cards, man. They know what's going on. They know when it's gonna happen, and they put their money where they see it, and that's how they stay rich. Inside information. So, welcome to the market. It's not fair. Never was. And it's definitely not getting any fairer by the day. But some things are changing. There's traders that are starting to pop up from these apps, and they're getting more serious with what they do, and they're learning. And they come to YouTube, come to videos like mine, come to the billions of others, well, not millions, a couple of hundred other YouTubers that go over stocks and go over other things. But for me, I'm not going to go over it too much. Sometimes I go over some details like this. Anyone can watch, anyone can see it. It's going to be recorded at some point and actually formatted correctly. To be a bit more easier to adjust. But I'm also really talking about the current market right now in this moment in time. So as I'm talking about it, I do like to explain what I'm talking about. Okay, back to what we're looking at. I think I'm going to take a break and play some games. Maybe Apex. Looks kind of strong. No, let's check. So, is it strong or is it not strong? That's the question. Always look at the volume. After hours, don't expect anything. That's in the colors in between. This is the after hours area, so don't expect anything crazy. But this spike in volume is huge, actually, because that's 300,000 in a 2,000 space. That bar was one volume, right? Someone got in with one. Over here is 3,000. Over here is 400. Over here is 2,000. But this bar here is 270,000. Now, if you know enough about the market, you know that there are some leniencies when it comes to pre-market and aftermarket. There's a place in time where these trades are settled, and sometimes you can settle them in what they call dark pools, but this is just off of exchange trading, not over the counter, but basically paper trading. No, not paper trading, that's fake money. Basically OTC, it's over the counter trading. It's really small stocks, low volume, etc. So a lot of trades go there, even if they're not low volume, like AMC, some trades go through there, but they get redirected. So your trade, not only does it go through Robinhood, let's say, it goes through other brokers, Citadel. They take a look at the stuff, they see what your sentiment is, and then they look at another couple of million people that are also trading, and they see everyone buying, so what do? They sell. So there's a guarantee that the market will always do the opposite of what the majority of the people are doing. But the majority of people control the market. So as the market switches, there's a war. Like, I don't know if I can explain this. There's a war going on in the market between those that have been in control of the market for the last 100 years versus those that have just entered the market with the internet, with a vast, infinite source of information and data. And using that data, they become competitive against these old fools that have been depending on their old strategies. So, and okay, so yeah, the last kind of icing on the cake here. So what's my strategy? Well, I showed you SPY. I told you what it looks like. I told you my prediction, where I'm thinking it's going to go down. And it's going to go down because of those margin calls, because they're just holding on to money that doesn't exist, and they need to return shit, and they need to use real money to basically cover the fake money, the fake stocks that exist, whatever, however you want to think of it. They owe shit is how I think of it. They need to return shit is how I think of it, and they gotta pay to return that shit. The higher the price on AMC and on GME and whatever other shorted stock you're looking at, the higher the price goes, the more money they gonna be paying. So the pattern still, this was an interesting one. Okay. Not bad. We had a strong bounce here on this support. This support is good. Purple. Yeah, right here. Right here. Small bounce. This is good. Showing that strength. So watch now if I write this line. Where's my line right here? If I put my line right here, and I go over here, it should kind of match up. Partial on nearly. I mean, if I micro lined it up. See? This is technical analysis. This is the psychology I'm talking about. So that happened from a previous line. I'm not really paying attention to the downward. I'm really focusing on the upward. So you could go down all at once. Some people got in at 20 bucks. I might feel like buying more at the bottom. I'm gonna see how far it goes. Maybe put another 1,000, 2,000 and we'll see. But I'm not all in yet. I'm maybe 10% in. The whole market generally. I'm just waiting for shit to actually develop in a huge either downward trend and I can short the crap out of it, or upward recovery. And it all has to do with this decision. Today and this week, are we going to stay above this channel, or are we going to break below it and then fall back in and then way down to 350? That's something that mainstream media was talking about at 1.2. They were saying 350. So I'm saying 350 as a path down to 220, 280. We'll see. But man, this bar is definitely taking forever to develop. Ooh, not good, not good. It looks strong, that bar looks good, but it's not strong enough to move above these two. And then finally, the question we asked earlier, is this strong? Look at that volume. It's shit. The volume compared to these downward candles, the upward volume, this candle looks amazing, but this volume is shit. This is a few people buying it all up to push the price up. But then when the regular come in, they're going to sell down because this is the major meaning. This is the major kind of decision. Two big volume candles, both downward, right? One great big engulfing. It's engulfing because it's bigger than the other, right? These two are bigger than the other two, but the volume is a third of the smaller volume candle and like an eighth of the bigger, right? So my prediction, denied. and then we start following it downward. Probably, I can maybe see it here. Right there. Start following the downward pattern trend. Well, let's see what happens. I don't know. Oh, I'll be back in a little bit. That's crazy right now, Chico. Now? Yeah. No, you just came in. Alright, looks like we're bouncing. Holy moly. Let's see, volume still low. Very low. I mean, the average. Yeah, it's below average for sure. Yes, baby, what do you want? I give you food. You just came in. Eat food. Come here. Come here. Come here. Come here. Come on, baby. Come on, baby. Why are you meow meow? Fine. You want to go outside again? Seriously? You just came in. Just drink water. Punk ass cat. Alright. Oh no. Let's just do Epakasu. Epaksu. Oh, I'm so burnt out, man. So burnt out. Sugar with this chocolate milk. Alright, time to do stuff. Distractions, 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 distractions. Capture card? Oh. No, he did it again. Really? Seriously? That's what you're gonna do? There we go. And that's a hunt. Punk. Oh. Oh, fuck! Ah! Fuck. Stupid script. No, that was just me doing stupid shit. God damn it. Oh, nice job. Oh, fuck. Behind you, they're coming. They're following. Alright, I'm good. Sorry about that. Should have muted. Oh, hi. Oh, I love those. I miss those old ones. But what did it jump? What the fuck? Oh, nice. Thought I saw purple something. Oh, fuck! This bitch. Ah. I think it's only one. Nice. Oh, come on. Nice. Oh, yeah. Oh, no. Good game. That bastard. Why is it so spooky? The hell? Sell D12, D14? With this? With this dude? Inmate secured. Really? What the? Why are they so fast? What is that? Wow, this motherfucker. No, no me gusta. No quiero. Gracias. Oh, they go. Probably backside. They were here. What the fuck? Yeah, you and you too. Oh, fuck. Tried. Oh, tried. Alright, let's do this. Alright, you win. I love the communication between the characters. God damn it. Nice. So you know each other? What the fuck are I saying? Whoa. Is this the whole map? Yeah, that's so cool. If you guys find a bow, let me know. Again. Keep picking shit. Seriously? All the shit I pick up. It's a burden on me. Huh, cool. Useless, but cool. Okay, great. Nope. Okay. Well, sucks for that sign. Yeah, it's a little bit of a marathon. Come on, give me a good gun. I need my RE45. Or at least a bow. Come on. Come on. Ooh, you can't out fucking me, brah. You can't out-mirage me. No one can out-mirage me, bro. Goddamn. Why do I have so much? I don't need this. I need shields if anything. Not even need. Strong word. No bow. Says me to myself. Come on, I need some light ammo. Ease. Well played, guys. Getting. Shit, MC's not doing good. It's not over yet, but it should not close here. It's still... yeah, whatever. At least we're above this MA. It's still good. It's still bullish. But this support needs to be respected. So we gotta wait. I don't want to. Not again. Huh, okay. Oh my god, really? Does nobody want to jump in this map ever? Like, seriously. I have not seen anyone that just willingly is okay with jumping on this map. It's like everyone's new and they don't know what this map is. Probably. Actually, lately it's been getting more popular, so I wouldn't be surprised. No. Not ready to fight yet. Okay, we'll try you out. See how you've bowed. Give you a second chance. I'll change that. Yep. No. Oh wow, cool. Overloading a magazine, that's realistic. And now we're on the hunts. Yeah, I know. How do you... Whoa. Serious? She can give info? That's sick. I need the fucking... There? No. Oh, they're fighting without me! Come on. I can be alone. So boring. Yeah. Yep. Oh God. That was dumb. Anyway. Still 22 value. 22 is a good value. We want to keep that, and I think we are. Oh, this thing again. SPY wants to go up. It's above that spot. That's a good thing. But the decreasing volume is sketchy, man. Like a, it seems like it's at the end of its bounce. Look at the RSI. RSI is getting above, getting near 70s. 70s and overheat. Everything above is also overheat. But and even the, I think that's a 13. Oh, it's a MA. They put a MA and a RSI close SMA. Oh, RSI is up here, MA is down here. Oh, that's a cool one. I didn't know that. Alright, cool. Okay, so RSI like 14 days. 2 standard deviations is fine. So 14. And the SM. RSI 14 and the MA 14. SMA is what? Like summarized moving average? Regardless, notice that the yellow never really goes above. It went up above once. Way down here. And here. When it had like these bursts of energy. So it went above the 70. But it never really goes above, and most of the time it returns even before this location. So if I mark this, how much time has it spent above this line? A little bit, a little bit, a little bit, a little bit. Most of the time it's below. It literally touches this line, goes above and comes back down. If it even goes above, most of the time it's in the bottom actually. Look at that. It's mostly hovering at the bottom. So the yellow line is kind of overheated, which is the moving average. And it's nearing the 70 and it barely reaches the 70. And then the RSI is already extremely overheated. It's in 78. It can still maybe go up further if there's some crazy spikes, but the volume doesn't show that demand there. So there's no demand. It's basically waiting for a sell-off. It's waiting for someone to start the snowball effect of selling off. Until the buyer or the sellers come in, the buyers, which, you know, institutions, whatever, they're gonna just keep trickle buying in, pushing it up, creating that supply, and basically manufacturing the demand. If somebody needs it, they manufacture the supply. If somebody needs it, they create it out of thin air. Short, called a naked chair. Then they have to be returned quick. Could be used on a specific timeline. If it doesn't get basically closed, they become failure to delivers. etc., etc., etc. Remember, any keyword that I say can be researched further. Never forget you can Google things I say also, and find out more details. So use that as your strength of keywords. Once you know the keywords, you can be a master of a subject, especially with Google. Man, it's not looking good. The strength is already barely holding on. And we gotta hold on a little bit further to pass this and stay above it. It barely has enough strength to get there. It's not looking good there. It's above all the technicals, so technicals look good. This is some cheap tricks that hedge funds use to make money. Sometimes weird shit happens in the pre-hours and the after hours. I'll go conspiracy theory on those hours. For sure. Weird shit happens. It's trying. See, that's the thing. It's super weak when it shows the megaphone. It's showing the megaphone pattern everywhere. And this one especially has this flat top. Wow, and this is okay. You want to look at it like this. When you're measuring the strength of a movement, you're looking at the angles. And you have to think in two ways. One, you can look at the angles and remember what they are, or two, you can think of them in conceptual, actual ways. For instance, people are buying on this yellow line. What does that mean, though? No one is buying above. What does that mean? That means there is no demand for the price above. And literally, it remains unchanged. 418.90, 418.90, 418.90, 418. It's within pennies of each other. So this is showing a concrete resistance to demand. This is showing people do not really care about buying it higher. This angle here is the complete opposite. As it gets lower and lower, it's showing people want to buy it cheaper and cheaper. What does that tell you? Where's the demand? Is the demand in the let's buy it expensive, or is the demand in I want to buy it cheap? That's where the mentality is. So watch the next few lines, but notice this little candle next. Notice what we have to pass, and notice where we're heading. Let's hope we can bounce off of this and make a new location for that demand. It's okay to do that. It's okay to bounce off of these and remain on them. But honestly, this looks super algorithmic rather than any random chance of human effect. The algorithms are buying lower. The algorithms are not buying any higher. They're now testing, the algorithms are testing this section here to see how strong it is. It seems okay. But, nope. We're trying to pass this top body candle right there. So trying to pass that location. Headed there. But honestly, if we don't, we create a double top right here. It's not a perfect double top, but it's significant enough to represent the same thing we just discussed. People don't want to buy it higher than 1977. They want to buy it cheaper. And then if you look back a notch, they want to buy it hella cheaper down here at 416, right? So this expansion is showing the interest of people wanting to buy cheaper and cheaper. This solidifying line is showing no change. People don't care to buy it any lower, well, any higher specifically. So it doesn't go any higher. Lower is down here, right? So they don't want to buy it higher. And now somehow we made it up here with really low volume. And now we're testing the next section of the graph. But it's not successful so far. We're on the 5-minute chart, right? Yeah. So that step by step that is being explained is a following of a concept that gets measured in many ways. Not just me explaining it to you verbally, but algorithms trade based on these things. People trade based on these things. Institutions trade based on these things. The majority of people trade based on the things I'm explaining. These lines, these hard lines of supply, these decreasing levels of interest in the price. This part, this downward progression, shows me it wants to go down. This straight line shows me it doesn't care to go up. It has no real decision, right? It's not technically going down, but it's not going up. It's just sitting normal, so the demand is kind of meh. Doesn't seem interested. Not only that, look at the volume profile. Super weak. So if we fall down through this, we're not going to take much time there. There's no demand at this value set. It's going to go straight down to here, and now we're fighting with 418. And then after that, we're going to go straight down. Look at how empty it is on the volume. If I expand it to 30 minutes, it progresses more. So literally no volume exposure here. It's going to drop down. It's going to start fighting down here at 414, another significant 411, etc. Right? So you're looking for those particular resistances. I don't really look at 5 minutes very often. It just takes forever. Watching it move, it's boring. I usually look at 30 minutes, 4 hours, days, weeks, and months. Sometimes maybe I'll turn a 1 minute, 5 minute if I'm going in a very volatile stock, but not very often do I do that unless I'm trying to fit myself into the AMC squeeze. Oh, and it froze again. Why are you freezing? The fan's on you, huh? Right? It froze. Yeah. What the fuck? It froze on the the hour candles? Something? Hold on. Let me troubleshoot this because this is getting very annoying. My capture card keeps freezing. Need to unplug and plug back in constantly. Emphasis on constantly. Re-enabling works for now. Hi guys, Jamie Mirza rips on blah 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 blah. Just freezes can indicate what causes the freeze. Okay, great. What's the purpose of using disable while not showing options? What? Well, this works for now. Disable when not showing. Oh, is mapped a button to hide show card seems it's only happening when I'm streaming, but also when I just run OBS playing around with it. Well, this works for now. Oh. Maybe it is doing something like that. Disable when not showing. Is that what's interfering with my capture card? Show in multi-view. Properties. Deactivate when not showing. Sure. Deactivate and then activate. And that's not going to do anything. So maybe I'll just go. Oh, and then I have to do a shortcut key, you said? Okay, I'm going to do this. Oh, oh, there it is. Oh, there it is. Oh, the double top initiated. Not perfect. Again, I would prefer to see double tops with a body candle and a body candle. Like, literally piece to piece. What did I mean? I mean literally like this. Watch. If I look for body candles, really any correlation between candles, I'm hoping to see that the lines coincide very similarly. The candles that represent that particular space doesn't have to be completely similar. Imagine it's like this, right? But I would still prefer that the body and the body align, right? Body and body. That's perfect. But what we're seeing here, it's like the body here and the wick. That still counts. It just shows less strength, right? It's not a significant movement in the same way. The sentiment isn't as strong in that particular direction. So what a double top means, or a double bottom, because it depends on where it happens. If it's a double top, it's trying to go up, but it gets denied. It tries again, it gets denied, and then it just says, fuck it, I'm going down. So that's what a double top signifies, and that's the effect of seeing a double top. You're going to expect the next set of candles to go down. But if it's the opposite, right, you know, like basically down like this, like a W. Yeah, I remember some streamer calls it the George W, the double bottom, right? You have some bars that go like this, they touch somewhere here, they go back up, they go down, they touch down here, they go back up, and then you have extreme growth, right? So you got double denied at the downward trend. Those flat lines we look at, there's no particular change in sentiment at the flat lines. And then when it goes back up, they show that enthusiasm, but it dies. And then finally, when it stops again at the same place, people that were up here, people that were here, people that were here, everyone that was selling is like, oh, we hit twice. Third time's the charm, guys. And honestly, that's one hit, two hit, three, yeah, something like that. Psychologically, like, numbers play a big part into the way things work. Sometimes stocks will get held out at certain prices. 420? I mean, wait, did it really? It kind of did, didn't it? Yeah, I mean, look at that. SPY is at 420. I'm just surprised it's not 69. You know what I mean? Like 420, 69. I'm telling you, psychological numbers play a huge part in this, in humanity. Like, this stock market is a representation of humanity and its business, economic, whatever. It's still humanity. It's still humans taking part in the system. So really, of course, you're going to be affected by the psychological effects of numbers. 333, 777, 666, all of those play a big part. Some are more dominant based on how common they are. So imagine, ask yourself this. Ask you and some friends this. Do you like even numbers or odd numbers better? Right? You get an answer. Most of the time, I predict I like even. And I know a lot of people that like even numbers, but I predict there's a majority of people that find more pleasantness in even numbers simply because of symmetry. So you will find that even numbers have a big resistance issue. I mean, 420 is even. We're stuck at 419, still fighting with 420, so next we're probably going to fight around 418. There's still so many even numbers that it doesn't become that useful. The real value here in numbers is the 5, 10, 20, 30, 50, 100 values, right? Those are special values. 400 is going to be a big resistance. 500 is going to be a big resistance. 450, 350, 300, all of those are huge resistances simply because of the way people like numbers. So that's why the three components to trading is knowing not only technicals, what I'm looking at, not only knowing fundamentals to actually invest, because trading, yeah, you can day trade, that's great, make some money now, but honestly, everyone should be preparing for the future regardless. So as a trader, you have a responsibility for yourself and the future self to not only just day trade and gamble your money, but also to make safe investments. So between technical, fundamental, and psychological, there's a lot of stuff to go through when it comes to the market. And see, that was kind of, I talked about this double bottom-ish. Yeah, that's kind of a double bottom. Was it that a double bottom? Where did I see the W, the head and shoulders? I don't remember where I saw it. Here's another example. Double bottom, a little flimsy, but still after it bounced. I mean, if you bought at the bottom, you'd be up nearly $10 per share. So that's how you make quick money in a day. But still, like, it's unpredictable. Anyone that tells you they have a plan, they have an indicator, they have whatever, it's unpredictable. You cannot. You can only depend on data. You can only depend on chances and probability of something happening. You're essentially using statistics to win 70% of the time and lose 30% of the time. And you keep about 40%, right? So thinking about that, your optimization is not, I'm going to make as much money as I can. It's the opposite. It's control how much money you lose so that when you make money, it actually counts. So you're not just backtracking, trying to get your money back all the time. That's why psychologically, not everyone is able. Some people will vengeance trade. They'll lose a shitload of money on one trade and then go in another trade, and they're gonna be like, "Oh, we're gonna make it back. We're gonna make it back. We're gonna make it back," and they don't make it back. You know? All right, fixed. A little longer than I wanted, but fixed. So really, yeah, still testing, but it doesn't look strong. Self-control is a very big thing, especially with trading, because your decisions are expensive. That's it. Your decisions are your work. You have to make the best decisions you can make, otherwise your work is going to be shit. So, making decisions under emotional constraint, that's going to fuck you over. That's going to make you a gambler, that's going to make you addicted to winning, and that's going to make you stressed at losing, and that's going to make you stare at these bars day by day, watching them move, hoping they go in the direction that you want, staring at your phone, staring at your computer. You don't want that. I experienced it short because I was changing my kind of strategy to trading, but I did realize when I did that, it didn't work. It was not less. I would lose more because I'm moving more. That's the problem. When you move a lot in your decisions, you lose more money. So your movements should be controlled, regulated, limited, self-controlled, whatever, right? You shouldn't just be like, oh, it's going up, I'm buying. No, it should be like, oh, it's going up, should I buy? Okay, what's the RSI? Is there still space for more money? No, it's overheated, I'm gonna wait. Alright, well, should I still go in? I lost money on that other trade doing the same thing. Should I do it again? Probably not. You know, these kind of things you have to take into effect. Like, do I have actually shares that I can, do I have money allocated for this? I spent this much this week. I told myself I was going to spend 200 a week, you know, to invest or trade, maybe 100 to invest, 100 to just trade and try my luck. Those are the rules you have to set standard for yourself. And then from there, including, of course, not limited to saving money and changing your lifestyle to accommodate growth and investment instead of consumerism and regurgitation. Like, I don't know. I've left that so long ago. I haven't turned on TVs forever. Get my information from data books and whatever. So TV's shit. American culture. Sorry, there is no American culture. All of that is bullshit. And etc. etc. In fact, I've met so many people that come from outside of America and they have amazing cultures coming in, and then generations down, their kids lose it 50%, their kids lose it another 50, their kids lose it further, and then the culture goes away in this American consumerism of big and better and burgers and blah 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 blah. Anyway, I'm not going on that subject. So, I do tend to digress, so that's gonna happen regardless, but I will catch myself normally. I can't guarantee that I'm gonna remember what I was talking before my digression, my tangents, but at the least I can get out of it before it gets too much. So 30 minutes. Alright, so I'm done with the SPY. I get the SPY. Let's see what AMC's doing. 5 minute. AMC showing a good bottom, 2087. Again, we saw that on the bigger chart, but now we see how it happened. That's the thing too, when you move back and forth, you want to make sure that you can justify understanding what happens with the candles. Look at this one candle. We're going from 30 minutes to 5. So what's going to happen is this candle is going to split into smaller candles that represent different sections here of the wick. Right? So let's make a specific line. Let's put this here. Let's make it thicker and give it a color. Make it, no, that's not bright enough. Let's make it bright pink. No, yeah, okay. So this, and then I go to 5 minute, and that line and everything underneath it is correlated to this. Basically, here's how it works, because really, you're looking at a negation. All of this negated itself. It's gone. Yeah, it went down, but it also went back up. Like nothing changed, right? So the representation of that is just one candle. There it is. Oops. Nope. Move. Yeah. Right here. One candle with the wick at the bottom, because then the movements negated themselves. So always good to kind of go back and forth to kind of get an idea of what's happening with the actual. That's just to train your instincts when you're looking at candles. Once you kind of see what bigger candles look when they're blown up into smaller pieces, then you spend less time flipping through all the timelines. You spend less time looking at the chart. You spend less time catching information, because now it's becoming more instinctive. You're seeing where the bottoms are, especially when you see these two doubles here. Kind of close on the balance, but not really. So that's a specific place that's of interest. Does it hit more? Not much. Here we respected it well. Didn't touch it, didn't touch it, didn't touch it. Went through it. Tried to go through it again, another force. Complete recall, back up, and then didn't touch it, didn't touch it. I want to say specifically, these candles showed this was fake and this was fake. Now, what do I mean by fake? I mean it's not natural. This doesn't happen normally. The signs of these lines shows a complete denial 3 times in a row with that particular line, so why would it go down the 4th? Dig it? And again, this shows further strength, showing what it should have actually done. Why is it so squiggly? Sideways squiggles? Whatever. Anyway, etc. Right? So it should have gone this direction, because these candles and basically these candles are one and the same. This just happened, probably super shorts happening in, like some shorts going in, trying to push it down below a specific level, the 21 level, and then we pushed right back up because the natural demand popped back in. And as soon as that drop happened, because notice the volume, always look at the volume. The bars tell you where it is, the volume shows you how it happened. The volume here is low. These pushes, this push especially, was very low volume. So this is normally when you actually revert. When you see a downward movement with a decreasing volume, normally you will reverse at this point and start going up with an increasing volume that will eventually decrease. It could be as high as before, it could be higher than before, it could be lower than before. But because it kind of had like a double tap, big hit, volume decrease, and then another hit, volume decrease. This was not logical. No one would do this. No one would see the pattern in the chart and purposely just sell further, because the actual reading of the chart is confidence. The confidence that we're basically playing around this white line, and you know, we're not even getting close to it. 3 bars in a row. 1, 2, 3. Did not touch the body to the candle, to the line. That's very good. Especially considering that, you know, this line's coming from here, a previous resistance, and if I go back further, this line correlates kind of with this wick, a little bit with this one, but doesn't touch it. It gives us a pretty big space, but if I zoom out, I'll probably find a much better. So we hit there. We've been traveling below it, that's why. That's kind of the upper bound of our path. So we're kind of playing with that, and that's very important actually, because that's the place we have to land on top of. We have to land on top of this bar to return to a bullish sentiment. Right now we're near below it. We've poked out, came back in. Now what might happen is actually we might fight with down here. We might go down to some resistance at 19. We do have resistance here from here. This flat space and this flat space creates this dotted line that basically stopped us here. These also correlate on the way down when we were doing that. But also notice that this value basically is the value that made us explode. This is probably such a specific value of interest, because no one wants to pay higher for the shorts that they have to return above this value. They want to pay it for cheap as possible, because that's kind of the concept of making money in a negative market. It's shorting it. That's something to go over in videos in the future. So when they see this, they're like, I want it to go down so I can make more money down there. But that's not happening for them. So that was the value I mean, it was a couple of breakouts. The first breakout was here into our previous highs during the spike back in January. That was huge. That was like $2. That was $1,000, 1,000% increase. $2 to 20, times 10. Whatever you had times 10, that's how much you have. So that was cool. Then we're back in that space, but we were in it for such a short time. That's the interesting part. They just started covering. I imagine these bars look like shorts covering for sure. And then these three bars, shorts covering, then something happens. The volume decreases. Kind of natural concept starts coming in. The demand of algorithms and whatever drives it even higher, and then they stop covering because honestly, I wouldn't cover either if I was going up here. I wouldn't be paying shit. I wouldn't be paying $50 for a share that I borrowed down here at $5. I'd be losing 10 times my money, right? So I believe the first few candles were shorts covering, and then it got out of control by algorithms and then people in demand, and eventually they halted the stock. They stopped buying, and then it started to traject downward. So that's what happened here, and that's why this 22 value is actually very, very, very important. This if you've been here since the beginning, this 22 value is clear to be this 13 value that we were fighting with so many times. We went up once, twice, three times fake down, then breakout, right? We tried so much to get through that, but finally we got through it. So honestly, looking at this after the downward trend, we tried once, right? We're trying twice now. I believe another third time, if we go back down, settle down here, we have a high 80% chance we're gonna chill here. Because look, volume is healthy, right? We have a super high volume underneath it, so people are willing to buy it for super cheap. So of course they're not gonna let it get to 12 because they're gonna buy it before it gets that cheap. Boom, we're gonna be within this bound here, where we're gonna do what we consider the accumulation phase. After a huge explosion, there's an accumulation phase. So right now we went from basically low 9 to high 25, right? So more than double the money that you put in. With that, you're basically considering that now we've kind of, the volume, right? The volume has been exhausted. Look at how it's decreasing. So lower movements, lower volatility is happening. So not big up-down movements, but rather it's going to kind of dwindle off to the side. Volume is going to start dropping. People are going to do basic trades. Whoever's going to go in is going to go in at the lower price, etc. And more people will start accumulating shares here. What that does is it makes a nice foundation. Then this $16 to $20 range becomes impenetrable, because we've already tried so many times to fight that location. This is huge location, right? We're above it too. Notice this. We got denied the first time, we passed it the second time. We went under it, tested it, went above it, fell down below it. We're literally fighting to stay here. And now we're back above it. Like, that consideration overall is, this is the space AMC is comfortable with now. That's why accumulation phase is going to be here. Gonna have some sort of I don't know, gonna go something like this, and there's some mini supports and resistances inside that'll kind of do something, and then eventually it'll start picking up, do some taps, and then break out, something of that form. It could also break down, do some tests down here, and then go right back up, right? So that's also possible. But in the case scenario, we're gonna be hovering in this space for I wouldn't say another year. This is definitely, the scale's too much. I think I have some calls for January, so I should make that note. I have 10 AMC calls for January 27th. Call expiration 10. gotta start leaving some notes for myself and keeping myself in tune. So it could do this, it could do this, it could also do all of this, but do it in like. Can I change the size? Come on, let me change the size. Let me change the size. Come on, brah, come on. I can't. I really can't change the size of the. Oh, I don't know. Whatever. It could do it for a long period of time, or it can also kind of just like blah blah blah. Fuck it. I hate this thing. It can go boop 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 boop. Right. So it can do something like that. It could do really quick. It could do really long. Those are the variables we can't control. We don't know how it's going to end up happening. All we can do is prepare for the possibilities, think of all possible situations that could arise, and react appropriately based on what we see in information. We cannot predict, we cannot say this company is going to go up, this one's going to go down. You can't even just be a technical trader or just a fundamental trader or even just a psychological trader. The more tools under your belt, the higher your success goes. My success probably 70, but I don't strive to make like those YOLO plays for like $10,000. I'm going for 100, 500 bucks here and there, maybe 1,000 if I get lucky. Right now I'm playing with the AMC pretty hardcore, so we'll see how that goes. But generally speaking, I'm not looking for those huge paychecks. I just sell on green, buy on red. That's it. Even if it's the same exact stock that I've been playing for years, buy more on red, sell on green. That's it. And as long as it takes, I'm just gonna hold it until it's green, and then I sell it, and then I buy it in red underneath the price I sold it, etc., etc., etc. And of course, looking at the technicals, I can optimize trying to hit the top, but it's not gonna happen. With me, maybe 5% of the time I can hit the top. 50% of the time I can get like 10% below the top. So it's not too crazy hard to get up there. It's just if you were trying to top tick everything, nah, give up. You're not gonna do it. You're only gonna miss your chance to do it and then lose money on the way down. So never try to top tick. Try to estimate a good value for it. Yep. All right, let's see GME. Let's see. GME is similar, but still different, man. It's so weird. I haven't looked at GME too much. I'm more of an AMC. I do have GME. I'm just holding on to them. I almost feel like I have barely marked it up. You can see I haven't even touched GME. There's no lines anywhere. So actually, this is a good example. I'll show you what I look at. I honestly feel like this was GME's pop right here. This was it. It was literally, I don't know how much more you expect to make from like, I don't know, 60 cents up to, what was the top candle? 60 cents all the way up to 120. That wasn't even the highest because this is just the daily candle. If I go to 4 hours and further, I mean, it's going to take me a while to get back there, but now it's 126. No, it was bigger than that. Are they manipulating data? 127? Hell fucking no. It wasn't just that. It was like $500 that it got to at one point. There's no way. There's no way they're not going to show me that data. Come on, load it up. Load it up. Give me. Yeah, no. Yo, bullshit, dude. That's maybe because it was such a like small period of time. It was one day that it reached 500 and it went back down, right? So maybe literally because, hold on. Was it 2021 or 2020? I think it was 2021. It wasn't that far ago. Come on. Give me that. Give me that. Am I there? Where is 20? Show. It won't let me do 5 minutes further back. Yeah, so because I get it. I get the accuracy and the information. Yeah, I saw it go to 500. Yeah, they're not displaying it as 500, but that's because like the 5 minute maybe hit 500 and went back down, so it wasn't like it was staying up there. Some lucky people got out at 500 a share, others did not, right? Most people probably got out at 120 a share. But still, 60 cents way down here. If you were in it early, brah, 40 cents. That's the lowest it's ever been. Low is 94 cents, 64 cents, 79. So if you bought in at 64 cents around January 2020 and you just held it and waited, Jesus, 120, let's call it average 120 divided by 0.6, right? 60 cents. You made 200 times whatever you put. So let's say you put $5. Let's say you bought $5 worth of AMC. Your $5 are now $1,000. Like, that's the comparison, right? Let's say you put $100 in times 200, right? You got $20,000. So yeah, it takes hindsight 2020, but that's kind of what you're doing when you're trading. You're not just, if this is your job, you're not just, oh, I'm going to be a safe investor and I'm going to put my money in gold and the S&P and just watch them go up and whatever. Like, yeah, do it. You know, you want to have something safe. But as an investor, you're also trying to be informed on what's happening. Like, the information behind the data is that GME went up to 150% of being short, which means that 150%, if there's 100% of anything in this world, it's the exact thing that exists, right? How can there be 150% of something? That's the question. That's not normal. That's not a good thing. Yeah, we see it sometimes in growth of a company. Oh, they're now 120% of what they used to be. Great. That's 100% plus 20. I get it. But 150% of something that is portrayed to exist in circulation means that there's basically 50% of it that exists outside of them even being physically existing, meaning ghosts. You've got extra. You've got stuff that shouldn't be there because it's 150%. So these issues, this data point was not seen for a long time. Then this one dude, some dude on YouTube, super eccentric, super kooky, goofy. God, what was his name? He was the guy who went to court and said, I am not a cat. Whatever. He basically got the info. He saw the information. He saw it in front of his face and he was like, oh, how can you do that? How can you short a stock 150%? He made it known. People got a whiff. They started buying and they fucked over the big companies because they're not supposed to be shorting 150% of something that there's only 100% of in the world, right? You can't give me 150% of diamonds ever. There's only 100% in the world. Where can you give me the other 50%? That's the stupid inconsistency and the overcomplicated system that we live in, and it's overcomplicated so bullshit like this falls through the cracks, man. 100%. It's not overcomplicated because it has to be. It doesn't have to be a complicated system. What is a market? Someone wants to buy, someone wants to sell. They meet, they agree, it's done. That's a market. It's not this shit that we have everywhere, right? Even CPI data is being changed by the government. I'm sorry, wasn't delicate research put into the actual CPI data to track the information we're looking for by mathematicians and statisticians and people that have worked years, hundreds of years, oh not hundreds, tens of 50s of whatever years. They've created the system and now you're going to change the definition? They're literally saying we're not in a recession because the old way of thinking about recession is not the same anymore. Fuck off. Like, that's how overcomplicated this shit is. To a point where not only people don't understand it themselves and they pretend they do because they use big and complicated words, but they also tell you you won't be able to understand this. So you gotta pay me to do it for you. That's a con. Ladies and gentlemen, that's a goddamn con. The market is a con in itself. Big institutions have more information, hence they have a higher probability of winning. Small dudes like us, we don't have that information. We don't talk with corporations. We don't have meetings with businesses to know information about the business that would make us money. We don't. We just don't go to a freaking CEO to talk to him because we don't have that access. But big boys here do, right? So that's the market in a nutshell. And that's not looking so good. Oh, we fell back down below. That's no bueno. No, no, no bueno. This line is not straight. This is not a straight line. Let's see. If we were to estimate a good place, we want to stay. If we want a bull market, we want to stay above here to maintain a bullish flow, to show we have strength on this location so we can start moving back up further, because we are at the tippy top now. So we got to show strength on this yellow line and then proceed to show strength further up that we can bypass. So the low volume I was mentioning before, yeah, look at it, it's getting worse. Holy shit, it's getting worse. 37,000 only, 200,000, 200, 400, 300, 500, 700, 50, 300. Anyway, the volume decrease is a decision based. It's decreasing because of this line, because of this particular resistance, because of this new location it's in, because we haven't been this high in a long, long, long time, and we're just retesting it to see if we can stay above this local resistance. It's not a historic resistance, it's a local resistance because it's being formed by the candles around it. So far so good, we're above. This could pose the ability for us to bounce, but notice again, we're approaching this huge resistance. If we get past this, remember what this was? This was the overall market in the general sense, right? So if we can get past this, it goes away from my prediction, which is what I want. I don't want it to go down. So if it stabilizes here, which is not looking like super strong, but if it stabilizes here and then continues to trade above, up here, then we can consider that we're done. Everything's fine. Give it a month. Yeah, I mean, give it some time. We have to also figure out what the data is about, because the data affects the market all the time. So don't expect that if everything looks perfect and looks like technically it should be going up, and then the Fed and the bank comes in and says that they can't, they printed too much money and they can't print anymore, so they're gonna have to cut down on stuff, and then boom. No matter how good the market looks, that'll pull it down. Interest rate hikes, CPI reports, CPEs, employers, corporate product inflation. There was another inflation indicating system for corporations and industries, but I forgot what that was called. I believe that's the one that the Fed cares about more. They don't care about the CPI. They even changed the CPI. Can you believe that? They changed the CPI in 2000? Millennia? Somewhere around there. So inflation's different because they're incorporating like so many things. So technically, because right now we're at like a 9% inflation, but if you if you remove everything they put in after to change the CPI, because they put stuff like gas, car insurance, phone, internet, housing expenses, utilities, etc., right? So they put all of the necessities in. But in reality, we don't need all those things to survive. In our environment, what are the two things we need in order to survive? Not biologically, in our environment, right? Not food. Food is an obvious one. We need a job and we need transportation. And if we don't have a house, then we use our car as a house, right? So regardless, gas and food. Yeah. What's the gas and food? We need a car. Oh, did I say it twice? Okay, we need a car. Oh, I need to stop. I'm gonna get off soon. We need a car to go. A car and a job. That's it. That's what I'm talking about. We need a car and we need a job and we need a way to get to the job. If we don't have a house, we're sleeping in the car. I've slept in the car. Some of you have slept in the car. Shit gets real sometimes. So when you take just food and just gas, you're looking at 15% inflation. Everything else they added to the CPI after like the millennia, 2000, whatever, everything they changed from what we used to look at as a CPI has just watered down our inflation to look like it's 9 or what, 9.2, 9.2, 9.3. But in reality, if you just look at gas and you just look at food, gas and food would be the most important ones, but jobs too. Jobs are plentiful, so that's fine. So that's why recently Biden opened up their reserves and flooded the market with oil. There's an election coming. Surprise, surprise. And that would at least stop inflation from going places. Food is definitely going up, but at least gas is being tended to. And there's plenty of jobs so people can continue the cycle of debt, which is what the capitalistic system basically strives on now. It's not gold. It's not any standard. Gold standard has become the debt standard. People selling other people's debt back and forth. Shit happens. You owe money for a hospital bill. One bank can't get it out of you fast enough. The other one says, I'll buy it. And then you get bothered by another bank because they bought your debt. It's weird, man. If you want to talk about an indiscreet form of slavery with the lower class, we looking at it, bros and sisters. Alright, I'm done talking. I think I'm done. I've over talked.